and I start almost self-selecting people who use charts, and that gets me into the macro guys. George Soros starts with a chart. Stan Druckenmiller starts with a chart. Paul Tudor Jones starts with a chart. Lewis Bacon starts with a chart. All of the greatest traders of all time all start with a chart. When you ask somebody like Paul Jones and say, can you trade without a chart? He'll say, no, I'm blind. Stan Druckenmiller, blind without a chart. And so you realize charts are a superpower because there's a lot of information held within them. So I still start with a chart on everything I do.
Hey guys, welcome to Everyday Finance. A harsh wake-up call has been sent by the markets to traders, reminding them that the game has changed forever. As panic swept through Wall Street following Donald Trump's announcement of a 100% tariff on Chinese imports, global stocks fell. The S&P 500 fell almost 3%, and tech companies were particularly hard hit. What began as a policy change descended into a full-scale market shock, revealing the vulnerability of human-driven trading in an era where algorithms rule. AI systems that process data and execute trades in milliseconds have surpassed retail traders who depend on emotion, intuition, or traditional chart patterns. Raoul Pal, a macro strategist, cautions that this is a structural reset rather than merely market volatility. Machines now set trends rather than following them. In every downturn, those who are unable to adjust to this algorithmic regime will continue to suffer. The message is unmistakable: change or die. Hesitancy is not only expensive, but also lethal in markets where automation and speed are paramount.
The problem is the governments around the world debasing currency by about 8% a year. That is basically why house prices get more expensive, but your wages don't. Wages don't go up, scarce assets do. That's why the stock market goes up, but your wages don't. So you're buying less of a share of all of this stuff. The problem is the S&P 500 has a load of shitty dead companies in it as well. And so it's really doing about 11, 12, 13% a year. And you've got 3% inflation just on your food and stuff. So you've got like 11% hurdle rate. So you're actually not getting any richer by owning the S&P 500. So your future self is going to look back at you and say, you moron, you did this to me. So NASDAQ does about 17, 18%, and Bitcoin does about 145. Okay. That tells you what your future self is going to thank you for. In exchange, you will get more volatility. These things are more volatile. But I was thinking back at something we were talking about before is, okay, let's say you want a shorter term trade. I'm not talking ultra short term. I'm talking about taking the trade that could last a week to 3 months, right? Mm-hmm. One of the biggest advantage hedge fund traders have now is they work for large firms of which they're surrounded by other traders who are filtering ideas and talking about it and exchanging ideas. So what you've got is a filtration system of ideas, and you learn from each other, and those people become better at what they do. What most people do is they don't select the people that they talk to all day in this, right? You are who you surround yourself by. So finding the right trading community and ideas, the higher quality you get, the better chances you will have, and you will all have, of succeeding. And that's one of the things we're building out at Real Vision is we've got a whole new platform launch, which is all about communities around whether it's particular stocks or particular ideas or crypto or whatever it is. But then everybody posts their trade ideas. They go on chain, on blockchain, so it's kind of proven that was your idea. So you can collect a track record. There's trading competitions, trading leagues, but everybody writes up their trade thesis. You can't post a trade idea without writing why and your stop loss and all of this. So it forces you in how to learn how to do good trades. You can then learn from everybody else because all of their trade ideas are out there. People write research notes. They're all out there. So you've got a self-selecting group of smart people, all learning from each other, all creating ideas that get better over time. Your performance will definitely increase when you learn from other people. And then we bring on all of the experts onto the platform that you learn more from. That is a superpower because that's like building a hedge fund. Over time, where we're going to go with all of this is, okay, so I can see Riz is a good trader, so I want to now just buy a Riz token on his short-term portfolio or his crypto version or whatever it is. And I can buy a token on that, and now you've become an asset manager. You're your own hedge fund. That's where it's going. And then we could look at the whole Real Vision community and say, well, of the hundreds of thousands of people in the community, what's the biggest signal here? One of the most successful hedge fund products of recent times is something called Marshall Wace Tops. Marshall Wace is the largest UK hedge fund now. And their product was, they knew that all of their brokers wanted to be hedge fund managers and wanted to prove how good they were. So what they did is they said, you give us your best ideas and we'll pay you if they work. So they incentivized these brokers to give them the best ideas. They then used machine learning or AI algorithm to then select the best, built a portfolio called Marshall Wace Tops. It's been one of the best performing hedge funds in the world. And we can do that with the whole Real Vision community. So community is really important. It's who you surround. If you surround yourselves by people who don't know what they're doing, they're just calling tops and bottoms all day on Twitter, you are not going to improve. But when you're with a group of people who actually care about improving and getting the right trade, who've got skin in the game, you'll learn. So that's just another thing I was thinking. How do you improve your odds? Improve your odds in life always is who you're surrounded by. You are a function of who you're surrounded by. When I launched the Global Macro Hedge Fund at GLG, one of our first investors came to the office and said, I want to give you what I think is the strongest tip I can give you in starting this journey. He's like, write your trade idea down. Why you put the trade on, what your entry level, what your exit level. This is what I use this methodology for the trade ideas on Real Vision. It's exactly what he told me to do. And I've used that always. And so we force people to do it because you are holding yourself accountable. And then you can go back and say, well, I overrode my own strategy. Okay, that's your fault. Did I follow the strategy? How did it work? That really helps you with the discipline of getting it right. There's a lot of people who don't want the discipline of getting it right. They just want to gamble. They want the adrenaline. But if you want to get it right, writing the idea down, entry, exit, why you've done it, and has anything changed, and coming back to the trade and saying, has something changed? So let's say it's not a chart idea. It's based on some fundamental thing, earnings numbers or whatever it is. And it doesn't start to play out as you thought, then you have to say something's changed. And then you just close the trade, regardless of where your P&L is. Because if not, you've then veered away and you're taking a different bet. But that's hard to do. Charting is easier. It's actually harder with a fundamental thesis. And so I do think it's a massive hack. I turned that basically into Global Macro Investor, the research service, was basically using that idea of writing down what was in my head, because you also make sense of it. And it's a really rewarding process to write it down, have these notes that help you think through the world, what's changing in the world, how you can take advantage of it. It's priceless to do, which is why a lot of hedge fund managers love writing their quarterly letters.
Yes.
Because they sit back and have a discussion with themselves about what's in my head. What am I trying to do here? Where's the opportunity set? It's really helpful.
Real wealth comes from knowing the rhythm of long-term trends rather than from chasing every candle or freaking out over every headline. Markets operate in enormous recurring cycles. The people who can see past the chaos of the present are ultimately in control of the future. Realizing that governments are printing record amounts of money and that the emergence of crypto technology is redefining value itself are two unstoppable forces that are subtly changing the world. Traditional currencies depreciate when the system is overloaded with liquidity. Scarce assets like Bitcoin emerge to compensate. It's momentum and math, not luck. The astute investor asks, which asset or industry is subtly leading the pack by taking a step back and comparing strength rather than price? The fastest horse, the investment that prospers in the very storm that breaks others, is discovered in this way by true macro thinkers. The objective is to align with the enormous tides that drive algorithms, not to outride them, as Raoul Pal frequently reminds us. Vision, not speed, will be rewarded in the future. This shift will be ridden by those who comprehend it. Those who don't will drown while trying to find the noise.
The other key thing I've learned is don't have too many trades. because you forget most of them. The smaller ones you leave and you tend to just bleed money. So I tend to be more focused. I mean, now I'm ultra focused, but then I only have to worry about one thing. What is moving the price of this asset, SUI, that I'm mainly invested in? And, the macro factor, that's much easier than having 30 different positions. So keep it relatively restrained in terms of number of positions. So then you've got these 5 bits of paper on your desk or on your screen, and you can ask yourself every morning, you just go through, read them. End of the day, add to any notes if there's something changed, and you'll actually start to feel clever. You will, because you're on top of your process. You'll feel clever, and you'll know you're onto something because it'll make you feel good. Is what am I doing? Am I following my plan? You know what? If I get this right, it's going to work. It's a really rewarding thing, and you don't feel so lost. Right? People coming into markets for the first time feel lost. Everything moves up and down and sideways, and you're getting stopped out of position. And you don't. But doing that one hack will make you feel like you've got a superpower, which is like you're on top of your book. Compounding of not only P&L but knowledge, and sophistication and ability, which compounds P&L even better.
Going back to that charting element, then. So for you, did you start off with charting?
Yeah. So my first job was training traders. I was customer support for a product called Teletrack, which was a charting product back in the early 90s. And charting was just taking off. I knew nothing about charting. I just graduated from university, and the entire charting part of my economics degree was one page, which is some people use charts, but it's stupid. And then I went, and I'll never forget, Goldman had just moved their offices to Fleet Street, brand new offices. And I went in there and the traders were all setting up. So there was a lot of kind of ordering of new equipment and setting stuff up. And I was setting up the charting thing. And it was all the famous heads of the prop trading who end up changing the world in terms of prop trading. We're all like, I need another one of these machines. How does this work? Everybody wanted charting. I'm like, wow, that was interesting. And then I realized how much people were using charting. And so I learned from John Murphy's Guide to Technical Analysis. I digested that book inside and out because I had to train other people on charting. And they used to play around with the thing. And I'm a very visual thinker. So charting distills all information into price and time. It's amazing. It's a superpower. And so now I can't do anything without a chart. I have to go with a chart first. Every idea I ever research is based on seeing the chart first and thinking it through. There's some very longer term stuff, maybe not, but generally speaking, it's like this setup looks interesting. Why? Or this is so against the narrative. What is going on here that is different? And then I'll go down that rabbit hole. And then you realize, it's like you can ask yourself a question like, if Tesla is a car company, why is it in this massive logarithmic channel? Doesn't make sense. But this chart looks like it's going up. And then you start thinking, okay, well, what else could this be? And you start going down the AI and robot rabbit hole and all the other things. So I only start with the chart. Then I go as a salesman in derivatives, equity derivatives. And I start almost self-selecting people who use charts. And that gets me into the macro guys. George Soros starts with a chart. Stan Druckenmiller starts with a chart. Paul Tudor Jones starts with a chart. Lewis Bacon starts with a chart. All of the greatest traders of all time all start with a chart. When you ask somebody like Paul Jones and say, can you trade without a chart? He'll say, no, I'm blind. Stan Druckenmiller, blind without a chart. And so you realize charts are a superpower because there's a lot of information held within them. So I still start with a chart on everything I do.
Raoul Pal believes that time, not speed or complexity, is the biggest advantage in markets. He thinks that short-term trading is consistently outperformed by the longer time horizon. It's an advantage that virtually no one uses. Individual investors have the flexibility to think in years rather than days, which is where the true advantage lies. Most hedge funds, on the other hand, are unable to use it, since they are required to pursue monthly returns. As we get closer to what Pal refers to as the economic singularity, which will occur around 2030, and occur when artificial intelligence surpasses human capacity, traditional trading will become mentally impossible to compete with. He encourages people to take advantage of this brief opportunity to establish long-term financial stability in the interim. He contends that cryptocurrency is still the asset with the fastest rate of appreciation in human history, but it demands discipline rather than speculation. Pal suggests a methodical strategy rather than chasing meme coins for short-term thrills, which he acknowledges has cost him money in the past. This strategy calls for keeping the majority of your capital in reputable, long-term assets like Bitcoin, allocating a smaller portion to swing trades, and setting aside only a small portion for higher-risk wagers. He ends with a straightforward and well-earned caution. Don't quit your job to trade full-time. Market euphoria is short-lived, and volatility is merciless when it turns. You won't have any money left over for when the real opportunity comes if you don't have a consistent source of income. He asserts that your real weapon is stability. Keep working, keep making money, and allow time not stressed to increase your wealth. Protecting your future before the rules change forever is more difficult than simply making wise investments in a world that is about to undergo an irreversible economic shift. The question at hand is straightforward. Will you continue to gamble in the near future, or begin accumulating the portfolio that your future self will appreciate?